There is one document, a single piece of paper that a qualified professional can produce in less than 10 minutes, that costs you nothing or next to nothing to obtain, and that when submitted to the right agency before the right deadline, has the legal authority to eliminate a bill that the majority of seniors in this country are currently paying every single month without realizing they do not have to. We are talking about a bill that averages $2,000 per year. A bill that has been quietly leaving senior bank accounts month after month, year after year, dressed up in language that makes it look mandatory, look fixed, look like simply the cost of being on Medicare in retirement. It is not mandatory for everyone. It is not fixed for everyone. And for a significant portion of seniors who are paying it right now, it should not exist at all. The document that eliminates it is real, it is specific, it has a form number, it has a submission process, and the seniors who know about it and submit it correctly stop paying this bill, sometimes within 30 days of approval. The seniors who do not know about it keep paying, month after month, year after year, handing over $2,000 annually for a charge that was never supposed to apply to their current situation in the first place. Today, I'm going to tell you exactly what this bill is, exactly what the document is, exactly who qualifies to use it, and exactly how to submit it so that you stop being one of the seniors who pays it. Stay through every part of this video because the qualification criteria are more generous than most people assume. The submission process is specific steps that determine whether your appeal is approved or denied, and the difference between doing this correctly and doing it incorrectly is the difference between eliminating this bill entirely and continuing to pay it for another full year while your appeal sits in a processing backlog. Before we get into it, subscribe right now and turn on the bell. What I am covering today is one of the most actionable pieces of financial information available to seniors in 2026, and it is buried so deep in Medicare and SSA documentation that the vast majority of people who qualify for it have never encountered it in plain language. This channel exists to surface exactly this kind of information, explain it clearly, and deliver it to you with enough context to actually use it. The people subscribed here are the ones who find out about documents like this before the submission window passes. The ones who are not subscribed are the ones who find out about it in a conversation with a friend who saved $2,000 and think to themselves that nobody ever told them. Subscribe, turn on the bell, and let's talk about your money. The bill is the IRMA surcharge, the income-related monthly adjustment amount. And if you're on Medicare and your income in a recent tax year crossed certain thresholds, the Social Security Administration has been adding this surcharge to your Medicare Part B and Part D premiums every single month based on that income. The standard Medicare Part B premium in 2026 is $185 per month. For seniors whose income falls within the first IRMA tier, that premium jumps to approximately $259 per month. The second tier brings it to $370 per month. The third tier to $480 per month. The fourth tier to $591 per month. And at the highest tier, the premium reaches $628 per month or higher. The difference between the standard premium and the highest IRMA tier is $443 per month. That is $5,316 per year in additional Medicare costs applied directly on top of whatever else you are paying for healthcare in retirement. Even at the first and most common IRMA tier, the surcharge adds $74 per month, which is $888 per year, to a bill that most seniors assume is fixed and non-negotiable. It is not fixed. It is not non-negotiable. And for a very large number of seniors currently paying it, it is based on income that no longer accurately reflects their financial reality. Here is why so many seniors are paying an IRMA surcharge that should not apply to them. Medicare uses a 2-year look-back period to determine your premium. In 2026, that means the SSA is looking at your 2024 tax return to calculate what you owe for Medicare this year. If your 2024 income was elevated for any reason, and this is where the list gets longer than most people expect, your 2026 Medicare premium reflects that elevated income regardless of what your income looks like today. A senior who sold a home in 2024 and recognized a large capital gain. A senior whose financial advisor recommended a Roth conversion in 2024 that pushed their income into a higher bracket. A senior who took a larger than usual required minimum distribution in 2024 because they had delayed RMDs during the pandemic years. A senior who received a lump sum pension payment, an insurance settlement, or an inheritance that was counted as income in 2024. A senior who is still working part-time in 2024 and had higher earned income than they do now in full retirement. A senior whose spouse passed away in 2024 and whose filing status changed from married filing jointly to single, which cut their income threshold in half overnight and pushed them into a higher IRMA bracket on a lower actual income. Every single one of these situations results in a Medicare surcharge in 2026 that is based on a financial picture that no longer exists. And every single one of them is a qualifying reason to submit the document that makes it stop. The document is the SSA 44, the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. This is the one piece of paper that, when completed correctly, submitted with the right supporting documentation, and delivered to the right office, has the legal authority to instruct the Social Security Administration to recalculate your Medicare premium based on your current income rather than the 2-year-old income they have been using. The SSA 44 is not a complaint form. It is not a request that the SSA can simply decline because they disagree with your reasoning. It is a formal appeal mechanism built into the Medicare premium system specifically for situations where the income used to calculate the premium does not reflect the beneficiary's current financial circumstances due to a qualifying life-changing event. And the list of qualifying life-changing events is broader than most seniors know. Marriage, divorce or annulment, death of a spouse, work stoppage, work reduction, meaning a reduction in hours or salary, even if you did not stop working entirely. Loss of income-producing property, such as a rental property that was sold or destroyed. Loss of pension income due to termination of a pension plan or the bankruptcy of a former employer. Receipt of an employer's settlement payment in a prior year that inflated income artificially. If any of these events occurred in 2024 or 2025 and your income is now lower as a result, you qualify to file the SSA 44, and you qualify to have your Medicare premium recalculated based on what you are actually earning today rather than what you earned 2 years ago when circumstances were different. Here is exactly how the submission process works and where seniors make the mistakes that get their appeals denied. The SSA 44 has 5 sections. The first section asks for your personal identifying information, including your Medicare number, your name, your address, and your date of birth. Complete this section exactly as it appears on your Medicare card. Discrepancies between the name on the form and the name on your Medicare record are one of the most common reasons for processing delays. The second section asks you to identify the qualifying life-changing event that caused your income to decrease. You will select from the list of qualifying events I described earlier. Be specific. If your income dropped because you stopped working, indicate work stoppage. If it dropped because your spouse died, indicate death of spouse. The SSA uses this selection to determine which income documentation they will require from you, and an incorrect selection can result in a request for additional documentation that delays your approval by weeks or months. The third section asks you to provide your estimated income for the current year or the most recently completed tax year that reflects your reduced income. This is where precision matters enormously. Do not estimate loosely. Use your actual projected income based on your Social Security benefit, any pension payments, any investment income, and any part-time earnings. If you're not certain of the exact figure, work with a tax preparer or financial advisor to arrive at the most accurate number possible before you complete this section. An income figure that is too high will result in a lower tier reduction than you are entitled to. An income figure that is too low may trigger additional scrutiny that slows the process. Get this number right. The fourth section requires your signature and the date. Sign with the same signature you use on legal documents. The fifth section is where most seniors make the critical error that costs them the appeal. This section requires supporting documentation, and the SSA is specific about what they will and will not accept. You need to provide either your most recently filed federal tax return for the year that shows your reduced income or if that return has not yet been filed, a signed statement from your employer or a letter from the Social Security Administration itself, showing your current benefit amount. You also need to provide documentation of the life-changing event itself. For work stoppage, that means a letter from your former employer or a final pay stub. For death of a spouse, that means a copy of the death certificate. For a Roth conversion or one-time distribution that inflated your 2024 income, a letter from your financial institution explaining the nature of the transaction can support your case. Do not submit the form without the documentation. A form submitted without supporting evidence will be returned or denied, and you will have lost weeks in the process. Once you have completed the SSA 44 and assembled your supporting documentation, submit it in person at your local Social Security office rather than by mail. In-person submission gives you two things that mailing does not: a date-stamped receipt that proves the submission occurred and the exact date it was received, and the opportunity to have an SSA representative do a preliminary review of your documentation on the spot and tell you immediately if something is missing rather than discovering 3 weeks later that your submission was incomplete. When you arrive at the SSA office, tell them you are there to submit an IRMA appeal using the SSA 44, that you would like a supervisor or benefits counselor to review your documentation before it is accepted into the system. You are entitled to make that request. Take that opportunity. An approved SSA 44 appeal can result in a reduction in your monthly Medicare premium that takes effect as soon as the following month's billing cycle. And in many cases, the SSA will issue a refund for overcharges going back to January 1st of the current year. At the first IRMA tier, that refund is $888. At the second tier, it is $2,220. At the third tier is $3,540. At the fourth tier, it is nearly $4,900. And at the highest tier, the annual refund can exceed $5,300. One document, one submission, one afternoon at your SSA office. That is the distance between continuing to pay a bill that should not exist and recovering thousands of dollars that were never supposed to leave your account. The SSA 44 is available at ssa.gov right now. Download it today, gather your documentation, and get it submitted. Subscribe, share this with every senior you know who is on Medicare, and I will see you in the next one.